Rightio. Okay, it's 4th of July today, Thursday. Let's see what we've got. Now, euro dollar, not a bad spot to sell actually. Okay, now the high of yesterday was 30.20, so this is a good spot to sell. This is also a good spot to sell. It's just under our opening pivot. There's the Gann line, the yellow line, the red line. It's a good spot to sell right now on a 15-minute chart. Yep, it is a good spot to sell. The only issue is, all right, there are more places to sell above that level. So how are we going to know when to sell and when not to sell? Well, we don't know where the market's exactly going to sell, but the 30.50 level is the weekly level, okay, and the 30.20 level is the high of yesterday. All right, that's the high of yesterday. So both of those levels are good to sell. This level is also good to sell. All right. So if you're not decisive, if you don't want to take all of them, this is what you do. You wait for a clean U-turn sell signal. All right. If you're using the manual trading system, you don't care where the market's gonna sell. It can sell from here, here, here. Once the market, let's say, wants to sell anyway, you just wait and you wait and you wait for a U-turn, and when it comes, you just sell. All right. So you don't have to rush your trade. Relax, chill out, have your morning coffee, and don't stress. If it goes higher, that's great. This is the last level I've got for today, the 30, 60, 50 area. Let's just check that. No, I lie. 30, 80, 90 area and 31.20. These are the last levels. So basically, this is what you can do. You can just relax, okay, and let the market do what it's going to do. And on your 15-minute chart, just take it easy and accordingly wait for the U-turn. Alright, so you don't have to rush. It's another line. It's also a good line. If it pops up here, it's worth a sell. Alright, easy. Pound dollar. Alright, we're going to have the same kind of mentality here. Nice resist. If it raises its head up again, yes, we do want to sell from around here. We drew this line like 2 days ago or yesterday, I don't remember, but I said if it comes back for a good pie kiss, do sell. And there you are. There's a good sales reaction there. Now the market still can go higher. It's not a big deal, but what we want to do, as it does go high, we want to keep selling, because ultimately the pound dollar target is all the way down here. All right, our pound dollar target is around what, 51. All right, all the way down here. So it's even lower than 51. So let's say around 50.90, something like that. All right. So if it raises its head up, keep shorting, keep shorting, keep shorting. Obviously, we don't know where the market's going to turn over. So all you have to do is you wait on your 15-minute chart. You get a clean signal, and then you can sell. Let's refresh the charts here. Daily pivots, not a drama. Obvious, okay, that there's going to be support here. There's going to be a sell reaction in this area. That's the high of yesterday. That's the weekly pivot. Yesterday, I said give it a shot on 52.82 during our live trading session. So I said to people, look, 52.82, just nail it, because it was obvious. And there, as you can see, it had a nice fall, which is enough for us to take 40, 50 pips there. All right. So from 52.82 all the way down here, it's already a good level for you. All right. So the low of that was 52.42, exactly 40 pips minus the spread. That gives you a nice 38 pips with about 15-20 pips stop loss. All right, so that was like in the first initial reaction, the market gave a good reaction there, and those kind of trades you can always take. So it's going to be the same kind of trigger here today. All right, weekly high of yesterday. If it breaks above that, then you don't muck around with it. It's obvious that the market's going to go to a new high, and from a new high, sell. All right, so you don't have to have any dramas there. There's a few spots it could go to. This is going to be the good buy kiss area. If I don't think it will make it on Friday, obviously. I don't know, it's a bit too far off in case some news comes in. It's actually only 200 pips away. Anything can happen, but we obviously want to short and go with our timing indicator as the market moves along. Now, dollar yen. No dramas here. Yesterday I said yellow line, blue line, and the second blue line here. those are the buy levels. Obviously the market's coming down, and the first support level is going to be here. Why? Because that is the support of yesterday, so the market will want to give it a bit of a buy reaction here. But this is also a breakdown. Okay, see the navy blue line here, the blue line, support breaking. So what will the market do? Bounce here, come back for a good buy kiss, and then roll down to this level. Alright, so all we have to do is to keep buying. Dollar yen is a currency pair we are following up. This baby has the potential to go all the way up here. Alright, so as it falls back, we just keep buying. You will get a reaction pretty much on every level. Okay, and that's enough to cover you. You can still get 25-30 pips off the market. That will cover your stop, and you can let another portion of the trade just run loose. If it comes back and breaks down to the next level, do the same thing again. It's not a problem. Alright, now then, what else have we got here? Dollar franc. Dollar franc, same routine as the dollar yen. I said yesterday, pulls back, you buy. Yellow line, great place to buy. Just under the yellow line, it bounced off, which is no surprise, which is that support level here. Alright, now what's it going to do? The market might pick up from here again up. I'm pretty much inclined to buy from here. Okay, I like following the trend, and I like following the trend when the market pulls back, because then we can really buy with a tight stop loss and just follow it through. So once again, it's a good support level, a good support area. Go to your 15-minute chart. Alright, here is your daily pivot. It's just above the daily pivot. The market's going to buy here or between the low of yesterday, 94.46, and 94.62. So there's only 10-15 pips there. If it falls down here, you buy. You don't question, you buy. And you buy with a tight stop loss. You don't have to put 100 pips stop loss, that's for sure. Here is a good spot to buy, but if you buy here, you need to put your stop loss under this level here. So it's going to be like 94.30 area you're going to put stop loss, and that's already 50 points. If that's too much for you, then you keep the trading volume low. Alright, and if it dips down, you buy here. Actually, it's not a bad place to buy today. I think we might put an order there. Let me just check the 1 hour chart as well. What's that 94.50 area? Let's just make this a little bit 94.50. We would like to buy at 94.50. Yeah, that's correct. Sounds good. Alright, fair enough. 94.50 is a good buy level. Alright. So, gold. Now gold, a nice spot to sell. Okay, right on the red line, timing and indicators in the sell zone. We want to sell. This baby has a potential to go down from here. Okay, now all these lines we drew, the white lines that is, alright, the red ones and the blue ones the system automatically does, but the white lines are the ones we drew manually, right? Because we also do technical analysis because we like it. And what happens here is, look, market pops up to resistance, pulls back, breaks up, goes to the next one, comes back to give this a good buy kiss, and goes to this one to bounce back off again. Now, if you know technical analysis just a little bit, and you integrate it to your manual trading system, it's gold. Alright, because you pretty much got every angle covered. Alright, and the system helps you with the automated lines as well, so you know this is the spot where you just got to sell. And this market, and the price will go down today at least to 1,243, which is a monthly target anyway. Alright, and beyond that, this white line is going to be a target. Okay, beyond that, if it breaks from down here, look, there's your target there, 1,217. 1,217 was an anticipated target last week. Okay, we were anticipating the market to come to these levels when the market was all the way up here. Why? For one very good reason, because we had the indicators aligned and we had the technical analysis aligned, and that was the way to go. Gold, you're going to sell here, great spot to sell. The second best spot to sell is going to be this 1,281 level. If it goes up there, you must nail it. Alright, Have a good day trading. All the best.